Good morning, everybody. Welcome to the Flow Show, Tuesday, the 15th of July. And the risk rhetoric about Russia and Ukraine is ramping up. We'll get to those headlines shortly. Good morning, Mr. K.
Morning, Ryan. Morning, everybody. Yeah, things are gradually heating up. Let's hope, let's at least hope not for the worst. Let's put it that way.
Yeah, so calm heads prevail. Right, going to kick off with a bit of data out of China. Get rid of that. Oh, no, can't. I've just mucked it all up. Oh, clicky, clicky, clicky. Now I've got to do it all over again. Bloody hell. Right, let's try that again. Right. Where am I? Oh, all over the place now. Right, here we go. There we go. China. Right. At last. GDP coming in for Q2 at 1.1%, better than the 0.9% expected year on year, coming in at 5.2%, which is pretty much bang on the money of where China expects its GDP to come in. Year-to-date number also looking a bit better, 5.3%. We also got some industrial production data coming in stronger for June, 6.8%. Year-to-date, better, 6.4%. Retail sales year-on-year missing expectations, coming in at 4.8%, still a positive. So Chinese consumers still not going gangbusters, but compared to other countries, that's a pretty decent number anyway. Unemployment rate stayed unchanged there. So overall, some not too bad data out of China. Could have been better. House prices, though, still in the negative, down 3.2%. Everyone, it's not new news to know what's going on in their property market, as has been for quite some time now. But overall data looking okay-ish. They still want to do more on that. Over in Japan, Pierre Mishiba is apparently going to meet Besant when he hops over there for his trip to the expo. The case of not going over and entering trade talks is looking thinner day by day. They're all going to be pestering him to get something done on all these trade deals and tariffs and whatnot. If you're trading the yen today, you need to be watching the yield space. Both US 10s are creeping higher. Japanese yields as well are moving higher. We're at multi-year highs again in some of those Japanese bond markets. There's obviously a lot of stuff going on. There's a negativity around this trade stuff affecting the yen. We've got this rally in yields, which particularly for Japan could be a bit of risk, could also be tied to increasing worries about this election next week, or when is it? 20th?
20th.
Yeah, 5 days time. Could be some worries about that if it's going to be bad news for Shiba. Not so much because he could face the exit door if it's a really bad result, but just making it harder for them to potentially pass legislation and things like that. So we're in the window now where the market is probably taking a bit more notice than it was a week or two ago. But some of those yield moves looking pretty strong. So if you're trading yen today, this week, you need to keep an eye on those and have that at the back of your mind. There's still no real reasons to be long yen at the moment, whether you're looking at the US side of things, dollar yen, or the Japanese side of things. Kay, it's not going to get, officials have brushed it under the rug, but we're not in any sort of frothy territory yet for yields, are we?
You mean the US yields?
Japanese.
No, but it could get a bit ugly for JGBs if you get a combination of Ishiba further losing influence or the LDP further losing influence in Japan, and at the same time, if Ishiba meets Besant and Besant says, "Well, you've got a very nice country, but I don't trade with you," so that could be a bit of a worry for Japan. So yeah, I'd say look more at the Japanese side. Obviously, we have data. We have the US CPI, etc., which are going to be traded. But yeah, as I said, start of the week, this week could be rather important for the Japanese yen, and there is a risk that we get how shall I say a double whammy or double negative news for Japan. And then it could really get a bit ugly for the Japanese yen as well.
Yeah, very much so.
But
Very much so.
but there's always the other side. Imagine that Besant has a little paper in his briefcase with him saying that after all they are going to make a deal, because let's face it, I mean, they still have to go to the ballot. They still have to vote, the Japanese. Imagine that Ishiba manages to get something going with the US. Maybe the voter will like it as well, and then you get the opposite side, obviously.
Yeah, so you can bet Shiba's going to be busting his bollocks to get something done before that election. And what's the risk that if it's a bad result, that he ends up resigning and being replaced?
Yeah. Thing is, I have not seen yet a prominent replacement for him. There are going to be people ready, but I haven't really seen somebody stick out and say like, "Yep, I'm going to do it." It's a bit of a mess over there. And the thing is as well is if he loses more, and they are going to get then they are really going to get in trouble to pass anything, because the opposition is still very much divided. They don't have like one person there who rallied everybody in the opposition around itself and around him or herself. And yeah, it's not going to be too pretty, I think, at first, if really LDP slumps a lot further. Maybe we should dig in a little bit into that to see who would be a worthy replacer for Ishiba if worse comes to worse.
And could we get that switch? Because there was that lady who was in the running when he was going for
the Tokyo one, yeah.
Yeah, when he was going for the PM-ship originally. Could she be back in the running?
What's her name again? I forgot her name. Koiko something.
Yeah.
Well, she could be. And again, I'm going to have to watch it to look it up exactly who is going to step up over there. I'll let's talk about it tomorrow also.
Yeah, because he beat I think it was Noda in the final, if you want to call it the final.
Yeah.
And but yeah, she was polling pretty strongly, if I remember, in the run up. But anyway, let's worry about that closer to the election itself when we get there. Right, where am I? Back to the data. Let's go back to the data. Oh, there it is. We also had a bit of retail sales data out from the BRC, showing a very healthy 2.7% year-on-year gain for June. Now, a lot of this is being put down to the good weather we've had, getting people out and about. But as good as that looks, what isn't good underneath the hood is that these higher sales are being attributed to higher prices, i.e. not buying more, but what people are buying costing more. So buying the same amount, just costing more, which isn't good news. And it's something that, well, if you want anecdotal evidence, my wife is moaning about how the weekly shop seems to be getting more and more expensive. And I'm not talking like a couple of quid either, as my bank account tells me. So there does seem to be a little bit of inflation pressure here in the UK. I don't know. Well, I don't know if you do the shopping, Kay, whether you've seen similar.
Yeah, definitely. The shopping basket gets more and more expensive. There's absolutely no doubt about it. And I think the people, if you look at the lower cost shops, are getting more and more people in compared to the more traditional. So and you probably noticed as well all the ads of the traditional ones going Aldi price match, because they know exactly what's going on there.
Yeah, exactly. So that's something just to keep an eye on. Everyone's expecting CPI, particularly the Bank of England. Well, they did say that there might be an inflation blip over the summer and coming months, but given, as I say, the shopping bills, that blip may be a bit more entrenched than they would like to see. So just keep an eye on that. We do have, obviously, UK CPI coming up this week as well, ahead of the next Bank of England meeting. So just keep an eye on that sort of thing to see if it's coming through. UK's Reeves apparently is poised to force firms to pay more into their staff pensions. This is all part of a drive to get money out of savings and into pensions and get the stock market going. It's all waffle and rubbish and pointless plans, but that's what they're going to do anyway. She has got this what's called the Mansion House speech, where she speaks in the city and tells everyone how great things are and how good she's going to make it all. And everyone claps politely while quaffing champagne and whatever. That's coming up this week. Won't be paying attention to that. Back to data. Spain CPI surprise to the upside. CPI there coming in at 2.3%. The Eurozone measure also coming in at 2.3%. Core CPI staying unchanged at 2.2%. So a little bit sticky over there in Spain, vastly different to the likes of France, who are well under 1% or just under 1% in their inflation metrics. Things are slowly continuing to improve in Germany. We had the zoo. Current conditions coming in less crappy at minus 59.5, beating the minus 65.5 expected. Overall sentiment improved to 52.7. Among the details from that zoo report, they said strong improvements of the past 2 months, and the positive sentiment among respondents is becoming more firmly established. Though they do note that this survey was taken before Trump sent his 30% letter out. So maybe that will take a dive next month, who knows. But things are slowly picking up in sentiment wise in Germany. We're going to have a new ECB bod joining in January when Bulgaria joined the Eurozone. Their governor Radev, it's Dmitry Radev. He's had a few comments out via EconoStream, and he's pretty much along the party line. He said the threshold for additional ECB rate cuts should remain high. He's going to be data dependent and focusing on inflation. So he hasn't really set his stall out. It didn't sound too dovish, but none too hawkish either. But that's early comments from him. According to Reuters, they're getting on the Sources Act ahead of the next ECB meeting next week. Says the ECB are going to discuss a more negative scenario than they envisioned at their June meeting following all the latest tariff threats from Trump. The ECB will apparently still stay on hold at the next meeting because their ECB members are reluctant to act on a threat alone. Says any ECB cut discussions remains pushed back to September. So really not looking to get anything out of this July meeting, but we know how scared of their own shadows they can get. Fed's Hamak, she says that she sees an economy that's really healthy, doesn't see an imminent need to cut rates, and says we are pretty close to where the neutral rate is. EU Sefcovic, talking about trade now, believes there is still a potential to continue US trade talks, but says the EU could target around 72 billion euros worth of US imports if tariff talks fail. A lot of noise coming out of the EU now is talking about what happens if there's no deal done in these talks, and how they're going to react to that with reciprocal tariffs, which will be interesting, because then we'll see how Trump responds to someone going reciprocal on him. He's already threatened that anyone who reciprocates will be reciprocated against, if you get me drift. Mexican President Sheinbaum says Mexico has done its part in the fight against fentanyl, and the US has to do its part. Says Mexico and US have a working scheme until the 1st of August. There has been very important progress with the US on security issues, and an agreement has almost been finalized. All tickety-boo as far as she was concerned, until Trump decided to drop a 17% tariff on tomato imports from Mexico. That came out of the blue, sort of. It had been threatened. The level was, I think, 21% originally. They were going to drop on that, but they've decided to make it 17%, which Mexico calls the anti-dumping decision as unjust. So, okay, even while people are negotiating, he's still willing to drop tariffs and duties and whatnot. Does it just get people's backs up?
His daily flip-flop, it seems. If he hasn't got anything else to say, he juggles around with different percentages here and there. It's confuse people to get to a result. That's the plan now, it seems. He has to keep his Truth Social viewers happy, I think, with the daily dose of truth bombs. I don't know, mate. It's you could say, like, on the face value, that 17%, to take that example, on the Mexican tomatoes are lower than 21, but it's still higher than what Mexico wants. We will see where it all ends up. And I'm even thinking that the 1st of August deadline is not really a deadline after all. There are going to be, especially with the bigger blocks. Well, it could be with the EU or so, but if you look at China, I mean, everything goes silent again. I mean, the Americans can make a bit of noise, but the Chinese, apart from saying that it's not justified, they are not really saying too much about it. But in Mexico's case, they have to continue talks, or continue to try and get some sort of reasonable agreement, because they need the US, obviously. Yeah, but then they have the USMCA still in place. Trump already said that there will be, under USMCA rules, less tariffs on some things, but it's all a bit confusing right now. And if you look at it from a market standpoint, you look at $MEX, for instance, it's really not moving much. And even if you look at the euro, we had this setback that we had in all. The dollar has been recovering versus everything, but it's not really going anywhere, right? So it's what I was saying. The big money, I think, is on the sidelines. I think there's a bit going on in sterling and yen, for instance, but the rest is extremely quiet. We have to say.
Yeah, very much so. I've seen a lot of pairs taking a bit of a breather at the moment, much to a lot of our frustrations. Right, over to the US again, and National Economic Committee Chair, whatever it is, Hassett, one of the favourites for the Fed job, says the Fed has been very wrong on tariffs, and we'll see how the Fed responds to the cost overrun. He's talking about this renovation thing that's hitting the headlines. Says they must rethink the way the Fed is acting. And apparently on that renovation thing, Powell has apparently requested an review on this 2.5 billion spent on renovating. It's being said that he's folding to pressure under Trump. He was, or the Fed was heavily criticised by Powell's arch nemesis, Elizabeth Warren, over that. She wasn't shy in jumping on that bandwagon, hence why we're now getting this review to see what's happened with this 2.5 billion. Was it justified? Has there been some shenanigans going on? Could it lead to Powell resigning? If that's the case, who knows? But it was a bit of a nothing story, but it's now building into a bit of a something story. So we need to keep an eye on that, because any review that finds Powell's come up short of being in charge of the Fed, he could be forced to resign, and that might be a sudden headline we have to deal with at some point. But we'll see. Don't know how long that's all going to take. Speaking of Mr. Trump, his big Russia announcement yesterday was that he was looking at slapping 100% tariffs on Russia, and also secondary sanctions on any other countries that buy oil from Russia if a peace deal isn't struck within 50 days. So we've got another deadline, September the 2nd, for this stuff, because he's not happy with Putin at all. Now, oil took a little bit of a dip yesterday afternoon. One of the reasons being the market was perhaps hedging that he might go hard on Russia oil energy, but he didn't really, as far as the market is concerned. So we had a bit of a washout yesterday, still in quite tight ranges, but perhaps not the big guns some people were expecting. What is probably the more important growing news is that he's also made a deal to send weapons to Ukraine, well, via proxies. The US will manufacture them if NATO pays for them, he says. The US won't be paying. He's going to be sending the best to NATO, and NATO may choose to have weapons sent to other countries. So there is a specific law. I don't know the full ins and outs. There's a law or something over there in the US where they can't supply certain weapons directly, particularly long-range weapons, directly to Ukraine, but they can sell them to NATO, and NATO can give them to whoever they wish, who can then operate said weapons. So they're getting around that. And then a bit of a headline came just before the flow show started, apparently from FT's sources, saying that Trump asked Zelenskyy if Ukraine could hit Moscow, to which Zelenskyy replied, "We can, if you give us the weapons to do so." So that is a bit of a rhetoric step up there. It's already been touted that some of the weapons that US are going to provide would have that capability, but that sort of thing has been held off by most Western nations giving Ukraine those abilities, because then they may lose control over what Zelenskyy does with them. But we're getting a pickup in rhetoric now between Trump, US and Russia. The Kremlin was out before all the news dropped, saying it's obvious that Ukraine is not in a hurry on peace negotiations, and they're waiting the timing of a third round of talks, so kicking a can into Ukraine's court. They said US weapons and ammunition supplies to Ukraine have continued and are continuing. And as I say that, Russia's Peskov is out saying the Kremlin needs time to analyze Trump's statements, saying that new Trump statements on war in Ukraine are serious, and Putin is to comment on Trump's words if necessary. So that's just dropping on the wires now, reporting by TASS. So this it's ramping up, Kay, this rhetoric. We said that was going to happen last week, and here we are. I thought the market might have reacted a bit more to that Moscow headline, but
yeah, indeed. But it doesn't. Complacency, I don't know. Maybe those things, the market. You're looking at the US CPI today, so maybe this thing is being pushed back a little, and then it will come back to the 4. or maybe it's going to ramp even up even higher if and when the first US rocket is fired from Ukraine. I really don't know why the market is reacting so little to it. Yesterday it was more like a sigh of relief. Was the market really thinking that US could put boots on the ground, and then that why there is a bit of relief? It is certainly an increase again in the tension. It's those things are like they're simmering under the surface until something pops up, and then all of a sudden the whole market will take notice of it, and will trade on the back of it. Again, it's probably one of those where um, promises or plans are made, and then we will see when it comes when the plan is made into execution what the result of it may be. But it's certainly not overall. It's certainly not a good thing. The world is looking or is watching to see if renewed U.S. involvement, whether it be indirect, in this case via NATO, is finally going to succeed to bring Russia to its knees. But we have been talking so much about it, to a lesser extent, North Korea, but still they are sending real human beings over there. But also, what's going to be Chinese reactions? Are they going to send more drones, more missiles to Russia to counter it? It's certainly a step up in the
Yeah.
situation again, and it doesn't seem like we're any closer to a resolution because of this.
Yeah, and just catching up with some other comments. We've had the Russian deputy foreign minister out saying Trump's comment saying Russia is ready to negotiate. A diplomatic way is preferable, and Russia does not accept any attempt to make demands, much less ultimatums. And the foreign minister said NATO countries are not interested in peace in Ukraine. So all these comments coming out right after that FT story dropped as well. So yeah, we're
So
ramping up.
we're basically still at stage one. I mean, the Ukraine wants its whole territory back, and Russia wants to keep what they already where they already are in control, and perhaps even more. So I mean,
Yeah.
nothing has changed. Zero.
No, exactly. But it's got to come to a head, I think, at some point, because Trump's reputation is on this as well.
Oh, yeah.
He's made big promises about stopping this, so yeah, he's put himself painted himself into a corner a bit on this one. We'll see what happens. Right, while I'm on oil, Evan's asking, could we go lower? Yes, of course we could go lower. This zone that we're in now, just looking at US oil for the moment, is a big old historical support and resistance zone. It goes back quite some time, as you can see there, right in here, all the way along, back and back and back. So this is a bit of a zone, bit of a pivot area. We're holding above it. We've had a little messing around at the moment, so it's not really decisive, but when we get above, we can stay above for a bit, and then we get below and in it and whatever. So can we head lower? Yes. What's going to take us lower? Obviously the manufacturing side of things, or the demand picture. If China's seeing a little bit of a pickup, if Germany's going to see a little bit of a pickup, if other manufacturing elements around the globe see a pickup, then that's going to be potentially supportive for oil. But on the flip side, if not, we've still got plenty of supply coming out, which is going to keep prices from rallying too far, going to keep prices probably pressured. But technically, yeah, whatever side of this zone we will sit on is going to guide direction. I don't know whether we're going to be heading all the way back down to the 50s or something like that. So I think we're probably going to be doing a bit of ranging, probably call it 60 to up to here, 76 is maybe $80 in that $20 range. moving with the headlines, of course, geopolitics front and center to this as well. So any really big pickup in rhetoric over Russia, the US getting involved, anything like that, then you're probably just going to see oil ramping high as a consequence, as part of the risk trade. So can we head lower? Yes, but you need to pick your points and wait for the price action to confirm that. So if we're holding at the bottom of this 67 zone and you want to get short, you know where your risk is, and you know you need to get through the 66 level or it ain't going lower. So that's what you need to be looking at for that one. And Ali, you said about in 20 years experience is telling us Forex is not a jackpot game. Making big money is difficult. If groceries is difficult for Ryan, then where do we stand? Okay, groceries are not difficult for me. This isn't about, you know, whether I can afford a tin of beans or not. This is about fundamentals. Okay, this is one thing I tell traders, particularly technical traders, who say they don't follow the fundamentals and they're just pure technicals. Above all, you live and breathe the fundamentals each and every day in your lives. Okay, you pay bills, you have mortgages, you have jobs, you go out, you eat in restaurants, you buy petrol, you fill your car up, you buy insurance, your phone bills, your Sky bills, utility bills. You live and breathe the fundamentals. You know when things are costing more, you know when things are costing less. Okay, the difference is noted. You know, if my shopping bill goes from £200 a month to £210 a month a week, I don't give a monkeys. You know, it's not something I'll worry about. But if it goes from £200 a week to £300 a week in a pretty short period of time, that tells me something's happening in the economy. It's nothing to do with my shopping bills per se. It's to do with what's happening in the economy. So all those people who don't think they understand the fundamentals, you live and breathe the fundamentals each and every day. Okay, use them in a trading sense. Okay, when you're out, when you go out with the missus or the family, is it busy? Is it quiet? Is it busy for the time of week or not? You know, weekends always busy. But if you go out on a Tuesday night and restaurants are full and packed, what does that tell you about consumer spending? So that's how you can apply fundamentals to trading. It just gives you a little bit of boots on the ground analysis as to what an economy might be doing. Okay, so that's how you use everyday items. I'm not going to trade on it. I'm not going to suddenly buy the quid because my shopping bill's gone up, but it forms a basis, an underlying understanding on what's going on. And then you wait and see if you see it in the data, like inflation, like retail price indexes and things like that. So don't close your mind to it. You've got all the experience there in your day-to-day lives to learn about fundamentals, and that's why I use them. And particularly if the missus is moaning, that's probably as good a, you'd know, Kay, the wife moaning about how much things cost is as good a financial indicator as you're going to get.
Yeah. Or when the wife asks for a second credit card. Yeah. I call it the street economy in one word. That's the one that plays a big part in fundamentals.
That's two words. So you've already got inflation in your
Street.
3 words. So that's inflation for you. Started at 1, ended at 3. There you go. That's the way it works. Right. Anyway, on to other things. Don't even know where to go. Not a lot going on at the moment. I'll look at dollar CAD while I'm here because I'm still trying to get a bit more out my longs that I took last week alongside Blake. The 36.50 still holding, but we can't get through this zone up here, 137, 137.20, 35. So we're still very short-term bullish just on this bounce. That's not massive, but we are still making higher highs, but now we've run into a bit of trouble here. So the wider picture, we're still very, very bearish. So that hasn't changed one iota. There is still a case that we've got a decent bottom here, but it's taken a bit of a time to work itself out, and I'm not hopeful that's going to change anytime soon. I suppose quickly, we should look at what's coming up for this CPI data. So expecting 2 points higher on the core and headline, 2.6 and 3%. So there's two-sided risks to this one, as we know. This is a credibility thing for Powell. Is he right in keeping rates on hold because inflation is going to go up, or is he wrong and inflation is going to come down? I don't think it's going to make any difference to the July meeting unless it's a real shocking number lower, say 2.6% in the core and 2.1, 2.2% in the headline. That will get expectations for a July cut ramping up, but whether they do or not is another question. On the other side, hot numbers. He's going to stay justified. Trump's going to have a rant about it, and we're going to be brushing out any lasting expectations for July and probably reducing some expectations for September as well. And that will make the window close even more on the amount of meetings they'll have left to do these potential 2 cuts in. That'll leave them 3 meetings if they don't do anything in July to do 2 cuts according to the dots, which we know are a load of rubbish anyway. Kay, what's your reaction going to be like to this CPI data today?
First of all, we've been talking about that in chat room as well. The expectations for the overnight straddle, which is when you buy a put and a call at the overnight, the total is about 55-60 pips right now. And remember the last jobs report, which was the last big data point that we had. The options were bang on because we nearly hit the that I think it was about 60 or so pips as well from that day as well, and we really hit the extreme of that expected range, and then euro dollar bounced. So first of all, we need to respect that, and it's again in the 55-60 pips range. So I'd like it's going to have to come out like more than 0.2 or so from expectations, or surpassing the psychological 3% mark on the core could do it to create a bigger move. But there will be interest on both sides of let's say the 116, 30, 40, 117, 40 area. So first of all, we will have to break that. Yes, there will be a psychological effect, Powell versus Trump. But after all, the market is still going to trade the number. Today, as expectations are, and it's not just because Powell is expecting it or whatever, but the market was already expecting it to be a bit higher. So the surprise trade for today is if the number is lower, in my opinion. So I think that's where, because we have been correcting the dollar, we have been seeing some dollars globally being better bid over the past couple of week or week and a half. So I think that's going to be the surprise trade of the day. So I would say if it comes in lower, the move may be a bit more rapid than when it comes higher, obviously within the margin of expectations. If we print a 3.2 core, yeah, the dollar will the yields will ramp higher, the stock market will go lower, the dollar will get a bid, but again, will that bid last for very long? We have seen other countries and other blocks when they had inflation data coming out a bit hotter, the effect was literally a few hours, and then the effect waned. So I'm going to go into this meeting saying that I expect a bigger move, bigger lasting move on a lower inflation than if we get a stickier one. That's kind of my small bias.
And what about after? Because obviously we've got this this risk stuff going on this week, which is going to potentially be the bigger news or the bigger event to keep an eye on this week. What if we get a soft dollar on soft numbers? Do you think that's going to last, and the risk trade will see buyers coming into the buck?
Yeah, the risk. Well, equities will probably go for a leg higher if we get a lower inflation number. Lower inflation number is actually good for risk, but we have seen different approaches for the dollar over the past months. I think the effect for if the inflation data are lower, the effects may be a little longer lasting as well. That is what I think. So the dollar, are we going to break new levels? I don't think so. I don't think so. But for instance, we could go back, take the euro dollar to a range 117.5, 118, rather than being under 117.5. That is what I think. But it's we're still in a market where I do think that for a while, at least, big money has not been involved. Is this inflation report going to drag them out of their summer lull? I'm still not convinced, Ryan, and it can be, but I'm really not convinced. Unless we get a real low print, then I think there's going to be, because then the expectations for July are going to ramp higher, and yeah, we are going to see a longer lasting weaker dollar. But don't I mean, and then you have to be selective again, because we have seen a few currencies under the cosh of late, which are the yen and the sterling. So expressing a lower dollar, those two may not be your best instrument, right? I would really personally stick to euro dollar, but then also Aussie and Kiwis trying to show some sort of a comeback. But if we get lower inflation numbers, and I'm going to come back to this one because I'm still not impressed about the MEX. The MEX thing, I think dollar MEX is maybe one of those candidates for finally going for that test of the 1850 if we get a low number. Now, if you get a sticky number on the other hand, I think stuff like dollar yen and cable are going to be amongst those who are going to be the weakest. I mean, dollar yen stronger, and then sterling cable probably going to get hit harder. In the advent, of course, of three events that are coming up. Like we got the Mansion House tonight, then we got tomorrow the inflation data in the UK, and the day after the jobs report. So, but those are two of the pairs that I think which could be most affected on a higher US inflation print.
Yeah, I think I'm going to be looking at dollar yen to potentially buy a dip if it's a softer number, because I think you've got to, like we've known for the last months, you've got to take these data points as a sort of 5-minute event versus what the market's doing outside of that. And we know the yen is there's no reasons to be long yen right now. So anything that brings a half decent dip, maybe down to 147, something like that, I think that's probably a dip I'd look to buy, because I think it will get back to higher Japanese yields, election worries, trade worries, and everything else going on. So I think that's probably my best candidate for a dip buy on that. On a rally, hot numbers, I think we're going to see yields, US 10s going up probably to that 450 mark again, which has been very important recently. We've had moves above it, but they haven't lasted, and we're on our way there again. So I think if we get up there, that will be a decent enough move that we might see yields contained there, which might put the brakes on any dollar yen move. But where that move coincides is another question. If it's up towards that 148.80s, that might be somewhere where I'll decide to give it a little tap on the head for a little stretch short. But I won't be trying to sit in that for any length of time. No. I can tell you that.
I think there's, well, I'm going to stick my neck out, but if the numbers are really sticky in the US with what we're seeing on all yen pairs. And yeah, maybe the US yields are one thing, but I mean, look at those crosses in the yen. Even a currency like sterling, which has been suffering of late. I mean, sterling yen is still trading at 198, which is, if you look at the sterling, I mean, it shouldn't be there. And I think those yen crosses are still very big. And let's not forget that if that CPI report is sticky, the yen is also a pair which can get a little bit volatile. I'm actually thinking I've got this zone there that we traded quite well. It has been a zone that has decided on directions anywhere between 148.20 and 148.70. If that flies through, I'm not sure where you're going to stop before 150, you know.
Yeah, yeah. So it's definitely the danger sport with being short yen pairs at the moment. Ali, to answer your question, no and no. Well, he can manipulate it, but it won't do him any good to manipulate data and statements and things like that because they're publicly released. So if he says something and the data's the other way, then he'll just be made to look a fool. So that's unlikely to happen. Yeah, there has been times when he's tipped to potentially tip the nod to jobs reports and things like that previously in his first term, but he's refrained from doing such things so far this term. In fact, Powell's probably more the guilty party in dropping PCE data on us ahead of time and being mostly correct on that as well. That's we can face some other questions from Liz Warren on that.
Yeah, I think
Right.
I think it's rather the Fed getting the numbers a day ahead than Trump, right?
Yeah, and I think he does get them though. I think the president does get the data. Whether it's a day before or not, I don't know. But I think he does get updated with it. Don't you remember he used to do his little dances about the jobs numbers in his
Yeah, the jobs numbers for sure,
in his first term. Right, Matt, I'm going to ping it over to you. Just looking at the clock. God,
yeah. I mean, I'm going to run really fast through everything.
full stop.
I mean, and I'm not going to show too much. The thing is, for the quick one on the euro dollar, I think it's pretty clear there. There is 116.40.50 on the downside, 117.10.20 on the top side. That's your tightest range going into the data. And then outside, you look at here, somewhere 116.10 down to 115.90. That's going to be the more important side. 117.40 above, and that's somewhere where that expected overnight straddle range will be for the euro dollar. So I guess here, if the number comes in as that weaker, pay close attention to what happens here, because as I said last time on the jobs number was the other way around. We came down to like 117 something, and then it bounced straight away after the jobs data, clearly indicating that there was option activity there. So anywhere closer to this lower end, we may find this kind of activity again as well on a sticky number. So pay some attention to the if there is a second wave up or down, that's going to be more important. But if it stops right on those expectations, it could just be that we continue to trade the range, which is also a trade, obviously. I'm going to look at what's happening quickly in silver, because yesterday there seems to be a new channel forming here. I'm going to clean this one up a little bit in the next couple of days, but it seems that we are trying to form a new channel. We rallied up very strongly over Thursday, Friday into Monday in silver, but yesterday we saw a bit of profit taking here, which gave actually a pretty decent move. I did let some of the last bit of the ad that I put on here, I let it go yesterday, so I'm back to my base position, and I'm waiting to see if on a sticky report perhaps we can get a bit of a move down here into those low 37s. I'm going to get a bit interested there to at least perhaps reload a little piece of what to add to my really long-term ones. Obviously, the big zone still around here, but we are already forming new bases, possible bases around higher 37s. Okay, gold still the same. We held resistance in the FIB zone again into the 3370s. We are cooling off a little bit in the advent of. If we get a weak report there, I guess we are going to trade 34 on a 34 handle pretty quickly again, because also of this ramping up in the rhetoric and in the whatever is possible again now, or at risk in Ukraine and Russia. I think any data that are not supportive for yields or so, they are going to have an effect in gold, and we could be trading at 3,400 or above relatively quickly. The first indication would be that if we break again above this 33.70-75 in gold. Okay, the other side, strong report. We have seen a bit of demand gradually stepping up from when we printed the low here in the 3280s. That is still going to be, I think, despite the trend line, but the trend line is gradually coming up to market. So we need to still keep those lows here on our radar in the 3280s. We could see like on a very sticky one, a quick drop perhaps, but that's already like 70-80 bucks from where we are. So perhaps we are finding already support earlier, especially because of the geopolitical situation. Again, not being of the best. Euro sterling, we did run into small levels here around 86.90, just went above 61.8 of this move here, 88.6 of the latest move lower in the euro sterling, finding a bit of resistance here. I also think it has to do with people taking some profits. I did around 90 this morning, and I took a fair bit of my longs now, and because I want to wait to see what's going to happen in the Mansion House in tomorrow's inflation data in the UK, because if they come in sticky, we could see a bit of a setback in this one to mid 86s, or maybe even back to those low 86s, and then perhaps start to move higher again. But we need always to be a little bit cautious with things. It's probably not going to be a one-way traffic, and we've already done pretty big moves, so it's perhaps time to take a bit of profits, at least partials, and reassess the situation for a bit. Yeah, I just wanted to show you that dollar yen thing, since February, at least February, because I could even go back before that. You look here, back into 2024, 148.60, back here in December 2024, 148.75. So this whole zone here for me is very important. If we fly through this one on a real sticky one, in the knowledge, and it's something that we can't forget, that nothing is done on trade between US and Japan. We've got those elections with a bit of risk for Ishiba and the LDP crew again coming up. We could fly through and have a quick run up into 150s. I am not going to exclude it if we get a real sticky CPI today. And with that, Ryan, back over to you, mate.
Thank you very much, mate. Wonderful stuff as always. And I think we'll call it a day for today. So take care over the data later on and all the headlines that may or may not come regarding everything else going on in the world. Trade safe, be good. We'll see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.